Hello everyone, I am Dhanushti from Sri Venkateswara College of Engineering, and I would like to welcome you to this technical seminar on stock price prediction using technical indicators. Today I will be presenting a predictive model that utilizes optimal deep learning techniques to improve stock price prediction accuracy. The stock market refers to trading of stocks or shares in a company, and its value is determined by supply and demand. The stock market is known for being highly volatile, meaning that the prices can fluctuate rapidly and unexpectedly, which can make it challenging for investors to make informed decisions. To help navigate the complexities of stock market, traders use a method called technical analysis to analyze historical price data and identify patterns or trends. However, this process can be time consuming and may not always produce accurate predictions. To improve the accuracy of stock market predictions, machine learning techniques are increasingly being used. By coupling machine learning techniques with fundamental or technical analysis, investors can make more informed decisions by analyzing a broader range of data and identifying patterns that may not be immediately visible to human eye. In an attempt to predict stock market trends and future stock prices, market researchers, traders, and investors regularly propose a range of models. These models are based on various methods including the following. The one is single and dual source of information. Single source of information method utilizes numerical information extracted from news and reviews, while dual source of information method utilizes historical price and volume data as well. The second one is fundamental and technical analysis. The fundamental analysis utilizes sales, earnings, profits, and other economic factors for forecasting, while the technical analysis utilizes some stock indicators like moving averages, exponential moving averages for forecasting. Most of recent research work uses machine learning algorithms to predict stock price movement. The two most common machine learning approaches are artificial neural network and support vector machine. These are widely used for long and short-term analysis and prediction of stock trends. Such methods generally uses technical indicators calculated from past price and volume data. People are interested in figuring out which ways of analyzing the stock markets, like using charts, news, and computer programs, works best to make money. Before jumping into the work done in this field, I would like to explain more about stock technical indicators. Technical indicators are calculations based on the price and volume of a stock, and they don't depend on things like how much money the company is making. Traders use these calculations to study how the price of a stock has moved over time and to figure out when to buy or sell. There are two main types of technical indicators, that is overlays and oscillators. One popular technical indicator is called simple moving average, which is a type of trend following indicators that smooths out the price fluctuations. By looking at technical indicators, traders can predict future prices and use these information to make automated trades. The formula for calculating popular technical indicators are listed in the table. As you can see in the table, Zai presented a system based on support vector machine algorithm that combines technical indicators and related news releases. For each trading day, 7 technical indicators are computed for 5 days. Two groups of news releases were used per day. The system achieved higher accuracy than achieving through single source, that is news or technical indicators. Coming to the second one, D'Souza investigated the profitability of technical analysis as applied to the stock market. Authors search for evidence that fundamental analysis and technical analysis complement each other. An automated trading system is developed to simulate transactions in this portfolio using technical analysis techniques. The average results shown that the system exceeded the value invested. Sample portfolio from Russia and India showed very strong returns. The work utilized two types of moving averages, that is simple and exponential moving averages. Coming to the next one, Pang and his colleagues came up with a new way to predict stock market using a type of computer program called deep long short term memory. They made two versions of this program, one with extra layer called an embedded layer, one with an automatic encoder. They found that these new programs were better at predicting stock market than older program. The most accurate program they made had a maximum accuracy of 57.2%. Coming to the fourth one, Chen and his team came up with a new way to help investors make better decisions when buying and selling stocks. They used a method called technical analysis, which involves looking at trends in the stock market and using certain indicators to predict what might happen next. With this method, they were able to forecast signals for trading in the stock market. The goal is to improve the quality of decision making for investors and help them make more profitable investment. And the last one, Hassan used several machine learning techniques to predict what will happen to the stock prices in future. They combined the results of different machine learning algorithms together to form an ensemble, which gives more accurate prediction by taking into account the strengths and weaknesses of each individual algorithm. The idea behind this approach is to improve the accuracy of prediction and make more informed decisions about buying or selling stocks. Coming to the problem statement. When investors decide whether to buy or sell a stock, they typically look at how well the company is doing and also take into account unexpected events happening globally, nationally, or socially. While these events can cause stock price to go up or down in short term, these effects are not usually permanent. Therefore, it's difficult to predict stock prices and trends just by looking at fundamental analysis, which looks at the company's financial and economic factors. As a result, an automated trading system or a model is needed that can analyze stock prices and use technical indicators to predict stock future trends. This would help investors make more informed decisions about buying or selling stock. The second one, finding technical indicators that are highly correlated with stock prices based on historical data is challenging task. It involves a lot of work and may even lead to incorrect predictions if not done carefully. In addition, determining which technical indicators are highly correlated with stock prices is another challenging that needs to be addressed in this work. This is because using the wrong technical indicators can also lead to incorrect predictions. When traditional machine learning and deep learning approaches are applied to predicting the stock market, the results are usually average. This is because the stock market tends to follow a random walk motion, making it difficult to predict with accuracy. However, by using an optimal LSTM deep learning algorithm and adaptive technical indicators, it is possible to make an effective forecast. Coming to the solution part, the model which we are using is a type of artificial intelligence that can process numerical or categorical features as numbers. In this model, the indicator values are represented as simple vectors. A deep neural network that operates on numbers by performing addition and multiplication operations on inputs and weights using neurons. In this proposed model, the input to the model is suggested through correlation tensors, which help to bridge the data with the DNN. These tensors enable the transformation of diverse information in rich stock technical indicators into formats that the DNN can use, allowing for ease and fast experimentation. In this model, the time series data is not directly fed into the DNN. Instead, its value is broken down into different categories based on a range of adaptive technical indicators. The process of transforming features vectors into tensors is shown in the figure below, and the important technical indicators along with their range and decisions are shown in the table. This approach allows the model to process and analyze the data more effectively, leading to more accurate predictions of the stock market trends. The process starts by using technical indicators to derive correlation vectors. Pearson correlation coefficient is used to calculate the degree of linear relationship between two variables, x and y. This is a suitable method as neural networks are based on relationship between variables. The correlation vectors are then transformed into a range of tensors with the correlated or adaptive technical indicators. Tensors are more efficient to represent data than vectors. Finally, an optimal long short-term memory neural network model is proposed using the embedded correlation tensor layer method. Optimal long short-term memory approach for stock trends forecasting using technical indicators. LSTM is a type of recurrent neural network that is adapted to resolve the problem of vanishing gradients, especially in long-term forecasting problems. Vanishing gradients are a common problem in neural network where the gradients become so small that the network stops learning effectively. LSTM are often considered the go-to network for recurrent neural network because they are better suited for handling long sequences of data, such as stock market data. Originally, LSTM was developed to extend the recurrent neural network memory state to enable it to deal with the longer input sequences, such as stock data. In contrast to recurrent neural network, which have only a standard tan edge layer in each repeating module, LSTM have 4 layers, namely the input gate, forget gate, output gate, and cell state. These layers allow LSTM to selectively forget or remember information over time, which is important for accurate long-term predictions. Coming to the proposed framework, the process described involves capturing stock data through APIs and extracting open, high, low, and close prices from the dataset. Technical analysis is then applied to build new input features through stock technical indicators, and the correlation between technical indicators and close price is derived. Highly correlated features and close prices are supplied to the optimal LSTM model in phase 4, with the 3-day, 10-day, 30-day moving averages performing the best. The optimal LSTM cell keeps tracks of not just memory but also long and short term memory. When predicting the accuracy of stock prices, the close price is derived into two classes. One is price rise, which is represented by 1, and price fall, which is represented by 0. The indication of price rise specifies the buy signal at the end of the day, while the price down indicates the sell of the stock. Finally, the model presents the strategic trends and prediction of stock prices. The model is evaluated on the basis of prediction accuracy and mean squared error. Coming to the result, the major outcomes of the model are obtained at stage 2, 3, 4, and 7. Framework reveals the correlation cluster map of HDFC Bank, which is obtained after step 2. The correlation map represents the correlation value between the price rise and stock technical indicators that are calculated. In this experimental study, the most adaptive STI are extracted and suitably pre-processed. The final outputs of the experiment are obtained at stage 7. The types of output are mentioned below. The one is price rise or price fall for intraday trading, and the second one is long and short term trend analysis for weekly and monthly trading. Prediction accuracy of optimal LSTM. The model was trained with a batch size of 30 and for varying number of epoch. The accuracy of the prediction was measured and represented in the table. The decision value of 1 indicates a prediction of price rise and 0 indicates a price fall. The accuracy was calculated based on how many times the prediction was correct, and the results were displayed up to 500 epoch, since the model became less accurate after that. The trend aimed to predict whether the stock price will rise or fall in the future, and based on this prediction suggest whether to buy or sell the stock. The accuracy of the prediction was measured by comparing the predicted trend with the actual trend over 141 days, which is about 30% of the total data available for 2-year period. The accuracy of the proposed model is also compared with two benchmark machine learning classifiers, which is support vector machine and logistic regression, and also it is compared with one deep learning model, which is embedded LSTM, to evaluate its performance on the given problem, shown in figure 2. The use of optimal LSTM in combination with the correlation tensor of adaptive STIs leads to an improved in the prediction performance. The proposed framework achieved the highest prediction accuracy of 65.64%, which is much higher than the accuracy achieved by other method. The mean accuracy of the classifier was 59.25%, which was also higher than other method. It is capable of exploring the correlation STIs and as a result can predict both short-term and long-term trends of any stock. The model can help investors make better investment decisions by predicting trends that follow the actual trend. There may be some uncertainty in the predicted trend and may be some risk involved in investing in certain stock for specific time period. However, the study suggests that the outcome of the model demonstrate that investors can fetch more profit by taking efficient decisions of buying and selling stocks. The proposed framework achieved the highest prediction accuracy without overfitting. Their study chose that the number of epoch to avoid overfitting, and the mean accuracy of the classifier achieved across all the dataset was 59.25%, which was the least across all classifiers, including the multi-layer perceptron. Coming to the conclusion part, the model used here is deep learning techniques to analyze the data and was designed to be flexible and adaptable to different markets. The authors suggested that their work opens up new areas of research in stock market trend forecasting, and they proposed that future studies could include more stock technical indicators and be evaluated against different machine learning and deep learning approaches. The proposed model could be optimized for stock indices and further enhanced to improve its performance. Finally, the author suggested that the model could be integrated into an automated trading system to support investors in decision making about specific stocks. Coming to the references, these are the papers which are referred for this technical seminar. Thank you for watching till the end. Please make sure to like, share, and subscribe.